Well, it's now time to delve a little bit deeper into the CBN's decision, and I have with me the retired Deputy Director of Banking and Payment System Department of the Central Bank of Nigeria, Margaret Ogundana. She joins me via Skype. Good to have you on the show today. Now, let's talk a little bit deeper about the decision by the MPC to retain the MPR at 12.5%. We saw a revision earlier from 13 to 12.5%, down 100 basis points. We see the cash reserve requirement also at 27.5%, the liquidity ratio 30%, and then the asymmetric corridor plus 200 minus 500 basis points. Did this decision come to you as a surprise? The MPC made it clear any other decision will be counterproductive either in the short term, medium term, or even the long term.
Thank you for having me. The recent MPC decision has not come as a surprise because of the status of the Nigerian economy and the Nigerian economy that is part of the global perspective, where we have a global pandemic that has been ravaging all economies. And as you will have seen, the pandemic created a lot of challenges for global economy. And in that process, and as part of an effort to ensure that the poverty level doesn't get worsened, the government has been given some concessionary loans. They've been offering intervention funds. So what that means is that there is enough money in the system to retain the MPR at 12.5%. And let me also say something. The MPR is a reference rate. Plus 2% means if, for instance, any bank wants to access the central bank discount window or loan at the end of any day's transactions, that will be at 14.5%, not 12.5%. That's the essence of that 2% asymmetric corridor. Now, like I said, the pandemic created a lot of problems, especially with respect to the supply chain. You know, with the lockdown, industries, farms, and the global economy shut down, and the demand also reduced in some areas, but not for domestic income and domestic needs for goods and services.
Let's also talk about how banks are faring now, looking at the cash reserve requirement at 27.5% as well. How do you think this is also going to be impacting banks as well? And then looking at the outlook for the second half of this year.
Okay, the CRR at 27.5. CRR can be defined as cash reserve requirements. Same with the liquidity ratio. What that means is that the CRR at 27.5 is a percentage of total deposit liabilities of the bank within a particular period, within a given period of time. And like I said, as a parameter, also in addition to the liquidity ratio at 30%, they also serve to help the bank, one, as a fallback, you know, their non-interest earning deposits, especially the CRR. And as a parameter, in addition to the liquidity ratio at 30%, what it means is that they are trying to ensure, or I don't want to say cast a strain, but to help the bank to be able to determine within a period of time the sort of credit that is available for the operations. So CRR at 27.5% is a percentage of total liability of the bank within a period of time. Same thing with the liquidity ratio. What that means is that those percentages has to be maintained within a period of time. And like I said, with all these loans coming, you know, loans, concessionary, whatever loans, whatever advances is given to the economy.
Let's also look at some commendations on the part of the CBN. One of the highlights is the fact that we've seen a modest recovery in the equities markets, and the LCCI, the Lagos Chamber of Commerce and Industry, says, well, we have to see a situation whereby in order to fill up the deficit and gap we have in our budget, we should also look at equity financing. And then the NPC also recognized the fact that we've seen a reduction in the non-performing loan rates, now at about 6.4%. How does this come to you, especially at a point in time when access to funds and supporting the key sectors of the economy is critical, cannot be overemphasized?
Thank you very much for that question. Let's start with the equities market. Now, if you look at the capital market, uh, what is going on there is very encouraging. It's part of the pandemic. And it shows that even the fabrics of our economy, when you look at it from the real sector perspective, is in order. But it could be better. And Nigeria is part of a global village. So whatever transaction, whatever activities takes place has a cascading impact on whatever happens in Nigeria. Now, modest recovery, given a pandemic, I think we should give kudos to those activities. In spite of the fact that, remember that we have a lockdown, we have many of the manufacturing firms who are locked down, but that notwithstanding, they were still able to provide us with some of what was needed.
Okay, Ma. Now, lastly, I would like to have your thought on the forces of demand and supply. Pushing forward is very strong agenda in terms of our domestic output and looking at regional trade on the back of the AFCFTA and other developments that we expect to kick off. And at this point in time, one of the agenda that we are pushing for is having Nigeria position itself as a strong economic hub in terms of aviation, in terms of trade, at least along the regional lines within West Africa. We have to strategize on our position. What's your take on that, hinging it on the diversification agenda of the government?
Given the position of Nigeria along the West African sub-region, in the first instance, it has a lot of influence, it has a lot of impact by virtue of its size. Nigeria has recorded a population of about 200 million people. And comparatively, it has a stronger economy than most of the others on the West African sub-region. And to help to revamp and reactivate many sectors in the economy, that is why the Central Bank of Nigeria provides what is called intervention funds. They are like loans at moderate rates, which is expected to be repaid back over a period of time. And if you look at the United States of America, Germany, France, and what have you, all of them provided various types of stimulus, even this pandemic, to help reactivate and bring back the economy and also to help reduce poverty. The same thing is going on in Nigeria. And now, to diversify the economy out of oil, there's an effort to also ensure that the non-oil sector is promoted. Of recent, I read the report that they want to set up a gold formation institution whereby the central bank can buy gold and put it as part of its reserves. And if that is done, it will help to enhance the gold reserves and, by extension, the foreign exchange earning. So to strategize and help not just Nigeria, but within the West African sub-region, and of course, Africa in general, because Nigeria still occupies a very significant place, not just on the West African sub-region, but also in the African perspective. So that's why all those intervention funds are supposed to help reactivate and promote growth in all the various sectors where they are available. In addition to that, there's an idea for a social safety net. It's not enough for you to say, oh, there's poverty, I want to help the people to get rid of poverty. We have to have a strong social safety net whereby people's interests will be protected given this pandemic going forward. And I think the Ministry for Disaster Management was trying to do that. And I think what they need to do is to make it more regular and take it up from there, whereby, you know, people are locked down, we all have to operate from home. It doesn't mean we won't still need some goods and services. So definitely, all those intervention funds, all those palliatives, all those loans taken, even on concessionary basis, they are all targeted to ensure that the economy doesn't just go down like that. But there are some indices which can be used to rejig so many of the sectors to still position the economy. So going forward, we have a budget that covers many of those things. No budget is a statement of intent. It's based on realisms as events unfold, and when I saw the budget, both for the 2020 and for the 2021 and the medium-term expenditure framework, all those ideas are already implicit in those budgets to ensure that come what may, Nigeria will be out of the woods maybe faster than we even expect.
What's most important is implementation at the end of the day, and we all hope to see Nigeria comes out stronger out of this pandemic, and then we see Nigeria position itself much more strategically. It's enough of talk at this point in time. Thank you very much for your time on the show so far. Margaret Ogundana, it's a pleasure having you.
Thank you for having me.